Let's bring in our panel of experts now for our Money Huddle. Newsmax contributor, business and market analyst Seth Denson, and also with us is the founder of Carnivore Trading, Dutch Masters. Welcome, gentlemen. Thanks for being with us on this very busy day for Wall Street.
Hey, good afternoon, Bianca.
So first off, obviously the market is reacting to the Fed's move yesterday. Seth, I want to get your reaction first off. We saw the gains yesterday now wiped out. What do you make of this? There was a 50 basis point hike that was widely expected.
Yeah, yesterday was no surprise, and investors rewarded the lack of surprise. And Chairman Powell's assertion that things are going to stable out and then this inflation is going to be somewhat transitory. He didn't use that word, but it's effectively what he said, just with different names. This morning, they woke up to the reality that maybe the economy isn't where we are. You've got name brands like Microsoft, Amazon, Meta, the big tech companies with 3, 4, 5, 7% losses. So that's what's the reality that investors are waking up to. They're hearing more and more sounds of the R word, which I don't like to use. I was almost tweeted it out and I stopped myself. It's like talking about a no-hitter. You just don't say it. But at the end of the day, you've got massive inflation, diesel challenges, the economy on a slowdown, actually on a retraction, and that spells concern for investors, and they're running for the hills.
And we're going to get into that diesel crisis in just a minute. Dutch, I mean, after the announcement from Jerome Powell, he did say in his post-press conference that they did take the 75 basis point hike off the table. Obviously, that wasn't enough to calm nerves today with investors.
No, I think that Seth's right. I think the soup that we are cooking here in our economy globally is a very dangerous one here. You don't save and solve food inflation and inflation in fertilizer and things like that by rising rates when they're basically caused by war and supply chain thing. And when you see the bond market being crushed right now, that's what they're really concerned about is two things. Oil, flew over 110 this morning. And every time we checked the 10-year, it was up another, 2 basis points. So 304, 306, 308, 310. And we have a resident genius here who said, look, if the bond market, if the yields don't stop rising like this, it's going to break something. It's going to cause a real crash here in something. And we have currencies and we have bonds that are trading with the volatility of stocks, and they are not supposed to do that. So that is really that's what investors are concerned about, I think.
Resident genius. We love that. Inverted yield curve. Yes, things we don't want to see here. Seth, to this point, though, we had Biden out there yesterday, touting a deficit reduction, trying to spin that as a win. But it's really not the truth. It's really not the story. It's about basically COVID spending that's going away. Bring us down to reality and spell it out for the viewers. That is spin.
It is, and that's really all the Biden administration has. Listen, 50% of Americans tout the economy as their number one issue, and we're all seeing what's going on in the economy right now. The Biden administration is grasping for anything they can do. The reality of it is, as you just mentioned, Bianca, that was COVID spending that is going away. But the reality is we still have $30 trillion to go to get deficit under control, and that's the problem. An additional thing that Dutch talking about, and this is really true, the United States economy is still the nicest house in a bad neighborhood, which is the global economy. And so what's happening is foreign investment is coming in, causing the federal currency, the dollar, to do what it's doing. So no matter what the Fed does, the foreign investment market is going to continue to cause fluctuation in the U.S. inflationary rate. And that's part of the problem. The Biden administration is just trying to find any spin they can.
And what's so sad is I think a lot of people, Dutch, have lost confidence in this administration because of that. And they're saying, now we're at this position. We didn't necessarily have to be here where the Fed is stepping in, threading the needle. Let's talk about the diesel that Mike was just reporting on. I mean, the refineries have been cut in the past decade. So people saw this coming. This isn't really a total surprise that the capacity is down. And there's also a strategic reserve, obviously, to address the crisis. How high do the prices have to get, you think, before those barrels are tapped?
We don't trade oil, but we do trade oil stocks and stocks that we trade. We see, like I said, our resident genius said that, there's no problem with oil going to about 150 here. We see it. I saw it and predicted that we're really going to be running in a range of sort of 90 to 110. We're still in that range. I think that, The thing that we don't want to do here is raise rates, like Seth says, into what looks like a global recession. That's a bad policy, and I think it's a policy error. What we want to tell traders to do, and the carnivore traders are watching the 10-year very carefully, if the rate of change can slow down and we can actually see the 10-year start to back up a little bit, that might give us some reprieve. But what we're watching in the stock market right now, we called on the 21st of last month, it's a crash in slow motion. We didn't know it would happen in slow motion. We just called for a crash in the stock market. We didn't know. We don't like to use that word. In fact, I hate that word. I don't ever want to use that word because I think it's just sort of, yellow journalism. But the truth of the matter is we have been watching a crash in slow motion. I think we're about done here on a short term for today. And I think that they've really shook people out pretty badly. And I think we might see a real spin here and a turn and a run to the upside, but not a lot of positive news that I can see to buoy the markets.
Dutch Master Seth Denson, as always, appreciate you joining us today and the insight, and I think the viewers appreciate it as well. Thanks, guys.
Thanks, Bianca.
Thank you.